Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV opening commentary Tuesday morning, April the 22nd. Thanks for joining us. Hope your morning is off to a good start. We are looking here at mixed prices. Beans, 4 cents better in the July contract, November up 2. Corn is failing in here. Forecasts turning wetter in Brazil. We're down 3 in the July, but almost a nickel in the December contract. Maybe a little bit drier forecast to allow some of that corn to get seeded. And then we have the wheat futures, which were higher for most of the night session, but down 3 3/4 in Chicago, Kansas City, off 1. Dollar is a little bit firmer here this morning. Remember, we had a big sell-off yesterday, and the dollar broke some support and quickly sold off. And then nat gas and crude oil firming up. Stock market a little bit firmer here. Gold and silver a little bit higher. Once again, we hit 3,500 in the gold. I think, it was a week or so ago, I was on RFD TV talking about the gold market, and we were around 3,300. And I thought we'd at least hit 35. That was a lot of the talk in the industry, and we hit that in the overnight trade. We backed off just a little bit, though. Let's start talking about what's happening with these markets. As always, visit our website. We can sign up for our daily newsletters and Facebook page, Twitter feed, that sort of thing. And make sure you follow us on Twitter. All right. So weather-wise, spring planting looks wet for the eastern corn belt. Could cause some planting delays, but it is a little bit drier than what it was yesterday. And there is also some rain forecast for the winter wheat belt. Now, that is badly needed, especially in areas of northern Kansas and Nebraska, Oklahoma, winter wheat areas. They've kind of been shortchanged here recently. Forecasts for the safrinha growing areas, they are slightly wetter than previous weather models. So that is going to put some pressure against that old crop corn, as it could mean that we will have less exports. So a drier forecast, maybe smaller crop in South America, more U.S. exports. This is the opposite, where wetter forecast, bigger crop potential, and less export. Winter wheat conditions, this is our crop progress numbers that came out yesterday. They were down 2% on the week, 45 good to excellent versus 50 last year. This was a little bit more than expected, and I didn't think it would give us much of a rally, if any. We kind of stalled out that rally, but the forecast is what's going to win out, and that forecast is much wetter. Key growing area is going to get a drink, it looks like, in the next 7 days. Corn plantings advanced to 12% complete. That's right in line with last year. Soybean seeds 8%, exactly the same as last year. So nothing wrong with our pace that we're on currently. We had near record crop sizes last year in corn and soybeans, and we're on pace so far with that planting pace from a year ago. Spring wheat seeding is a little bit better than expectations, and last year at 17% done. Coming up this Friday, May grain options go off the board on Friday the 25th, and then first notice day against those May grain futures is April the 30th. We have been mentioning now, as we get in the last 2 weeks of the month, would not recommend being long May futures at this point in time, because the funds will roll out of those long positions, mean they sell those, and then by July or by December, and it just puts you in behind the curve here. You're kind of taking on what they're doing. They're selling the May contracts. If you're trying to be long, you really want to get out of that and move to a different month if you want to continue to be long. Coming up on Thursday of this week, not only do we have the export sales, we also have the monthly cold storage report. That'll be out at 2 o'clock Central Time. This week's cattle facts show list, it's down 1,300 head for a total of 232,000 head. Remember, we had strong cash trade last week, $4 to $6 better in most locations. And this cash trade looks at least steady this week with the smaller show list numbers, but the Packers are cutting kills. Monday's slaughter was only 100,000 head. Those Packers are trying to slow the kill speeds, and that'll prop up box beef values. They were higher at midday. They were higher again last night, and that'll help restore their Packer margins. Yesterday's margins were about $120 in the red after paying up for the cash markets. So if they do cut these kills, as we're expecting, 100,000 slaughter yesterday is all, if they continue to keep these kills down for this week, they won't have to buy as much cattle, and we'll probably look at more of a steady market. If they can have steady cash trade, limited amounts, and slow the kill speeds, I think that's what they're going to try and do this week to bring up those box beef values. We'll look for the grains follow the weather patterns here. I think that's what direction they're headed towards. As always, if you have any questions, reach out to us. We'll be glad to talk markets with you. This has been Brian Hoops for Midwest Market Solutions. Give us a call. You can find numbers listed at our website, midwestmarketsolutions.com.